Hello everyone and welcome to my morning report analysis videos on Friday 5th of October with me, Richard Perry, market analyst at Hantec Markets. It is non-farm payrolls day, but the markets have sort of replaced what is usually a consolidation move with a slight move towards sort of lower risk sides of the market. So what we've seen in that environment comes with the fact that the yen is performing well. You've got the dollar, which is still performing well, and you've got the main factor being treasury yields are coming higher. So treasury yields, which remain strong, 10-year yield picking up again but above 3.2%, the 2-year also higher. It sort of all suggests that the market is sort of worried about inflation, and worrying about inflation which drives treasury yields higher means that there's a reduced risk appetite, and that sort of comes ahead of this payrolls report that we've got today, which sort of traders are beginning to factor in that we could see a sort of risk-averse move from that. So subsequently, we're seeing that through the forex markets today. You can see that, forex and equities. We can see that with the dollar strength and the yen strength. The yen outperforming the dollar, but the dollar pretty much outperforming everything else. So apart from sterling, interestingly enough, so that's something to keep an eye on. But other than that, we're still seeing this dollar strength holding up, and that is, as I said, coming as risk appetite has been reduced. Look at this move on S&P 500 last night. Strong move to the downside on S&P 500. Still in this uptrend channel, so within that uptrend, you'd still be looking at sort of buying into weakness, but be interesting to see if the move accelerates through payrolls report today. So payrolls is all important. Now, what are we looking out for from that payrolls report? Well, what we've got is an expectation of 185 on the headline. Now, it's a possibility that, there's a lot of question marks around whether that's going to be beaten or not. We had a strong ADP number, but then you've got to factor in that you had Hurricane Florence on the eastern seaboard affecting the market there, the jobs market there. But we're also looking out for average hourly earnings, which are expected to drop slightly to 2.8%, but again, that would remain strong. But if we do see an upside tick in those average hourly earnings, would that start to gain traction on those treasury yields again? So that would be the key factor there. So we're looking out for these payrolls report numbers as being all important. Now, other than that, there's international trade for the US at 130 as well, minus 53.5 expected there. Now, my chart today is Aussie yen, a classic safe haven risk appetite currency. So what we've seen in Aussie yen is this falling sharply as risk appetite has dropped in the last few sessions, and that continues to move. Now, that has sort of obviously put the resistance in place with these highs at around 82.50, but dropping back to 80.50 is the key. That is an old floor that's become a bit of a pivot in recent weeks. Now, close below 80.50 really does sort of put the pressure on. Certainly suggests a retest of 79.80, which is that little blue line there, the old lows through August and September, but a retreat back towards 78.70 could be seen. Look at these momentum indicators: bear cross on the MACD, accelerating lower on the stochastics, accelerating lower on the RSI. All suggests selling into strength is now being seen. So you can see that through the hourly chart as well. Negative configuration on the RSI, MACD and stochastics. Lower highs, lower lows. Actually using this falling 21-hour moving average as the base of resistance, that comes in at around 80.50 today, 80.55 at the moment. Today's high, 80.75, is a basis of resistance initially, but and the breakdown around sort of the 82.30 mark. Put the crosshair on there and expand it out. You can see that that was a level that the market was watching throughout this sort of top pattern completion. Having broken yesterday, it's sort of continued to the downside. So there is a corrective outlook forming on Aussie yen, and that sort of plays into this whole aspect of further correction, I think, in the markets, as it is a depiction of risk appetite being reduced. So I wish you good luck in your trading today, and I'll speak to you later.